Welcome to another episode of the Kinvestor Report, where we sit down with industry experts to discuss the latest developments in the Canadian small cap sector. I'm your host, Arlen Hanson. Standard disclaimer, no part of this interview should be construed as investment advice, and as I don't know what stocks we're talking about today, Ken may own shares or be compensated by the companies we discuss in today's interview. Be sure to join our network, subscribe to our channel, comment on the videos below, and share them with like-minded investors. Today, I'm joined by Robert Kientz, CEO of goldsilverpros.com, an online bullion store. He's got over 20 years of investment experience in commodities, Forex, and precious metals market, emphasizing long-term cyclical investing in the precious metals market. You can find his educational videos on YouTube. He's got a massive social media following and a great online presence. And of course, we'll be talking about owning physical gold and silver today. Robert, thanks for being here today. How are you?
I'm doing well. How are you doing?
I'm doing great, well, we are certainly going to talk about owning physical gold and silver today. But first, can you give our audience a little more background on yourself and goldsilverpros.com?
Yeah, so a little bit of long background is I worked in technology for 25 years. Along the way, I developed this love for finance and worked my way into Austrian economics and then into gold and silver. Obviously, Austrian economists talk about gold as a balancing of the monetary system and how things generally tend to work better. You have less inflation, less financial upheaval when you have gold and silver. So I'd say now about 14 years ago, I wrote a book called Drop Shadow, The Truth About the Economy. And in that, really out of the 10 chapters, I talk mostly about macroeconomics and economic theory, if you will, and apply some Austrian economic lessons to what we've seen. And eventually I talk about, investing in gold and silver. And then I started writing online. Seeking Alpha got syndicated across a bunch of different other websites. And eventually about 4 years ago, decided to start social media in the gold and silver space, started Gold Silver Pros, done a lot of advocacy for companies across the gold and silver space and in general, just for gold and silver. So have visited mines to look at how we get gold and silver out of the ground, all the way to now opening up my own retail shop here in North Texas for gold and silver, and also being partnered with a group that's doing setting up a wholesale distributor here in the United States as well, and partnering with with other companies along the gold and silver ecosystem. So I really went from just being an average guy, a technology guy. My master's is in cybersecurity, doing that, as an auditor, IT, cybersecurity, to sort of having this epiphany about, wait a minute, we need to talk about something bigger. Yeah. And what I loved what I did when I was in tech, but I felt drawn to this field so much that it's turned into my life. And so this is what I do every day, probably 12 to 15 hours a day, but it doesn't seem like work just because I love it so much.
You're a gold bug.
Yes.
Yeah.
I got the bug.
Right on. Well, I've had it for a very long time. You can't shake it, can you? Right. So we are gold bugs. We got a million arguments as to why you should hold physical, gold and silver, et cetera. But can we just dummy it down? What's the number one reason you think physical should be part of a portfolio?
Well, I think the number one reason is it's been the biggest portfolio stabilizer in history. If you have 10 or 20% of gold in your portfolio, it shows that it helps even out the lows. So it's a great contrarian investment to stocks and bonds. But even when, pitted against stocks, say since 2000, it's actually done a little bit better in terms of its overall return, its price growth. And that's in particular because of the amount of inflation in society. So the number one thing to even out your portfolio to deal with recessions and inflation is gold, and gold is that sort of stable anchor to any portfolio. You certainly don't have to go 100% gold, but even adding that to a portfolio of other things, traditional, what I call traditional, actually gold and silver are more traditional than these other things, which haven't been around as long. But the financial media now says traditional investments are stocks and bonds and things like that. So you add gold to those investments, and it evens out the problems you have in your portfolio, and gives just a lot of overall stability. And of course, physical is the best form to own it in.
And so when we're talking about owning physical, what do you think the best way is? Actually owning the physical, or can you get that same exposure through an ETF or one of these other financial instruments that have been magically created?
Yeah. So I'm not anybody's financial investor, so I can't give specific advice, but I will say this: what I do and what I found in my own, my own travels, my own research, is always, if you're going to take a position in gold and silver, start with physical first. Go for the bullion, find a reputable local dealer, find somebody online that you trust. Research it, of course, before you do this. And then when you're interested, buy some physical. Of course, you don't want to get too much physical in your own household because then it becomes sort of an issue. It's kind of like keeping
risk.
cash around.
Yep.
So you definitely have to be careful with that. Other things that you can do if you want physical, but you don't want that risk of holding them at home, is to find a reputable company that will store it for you. There are BRICS, Loomis, Mecca, those other companies worldwide that have these depositories that you can open, those depositories, deposit cash or wire money, and they can hold the gold and silver for you. Of course, you have some fees there, but it does give you that peace of mind. As far as other derivative, what I call derivatives, man, if you're looking at like the ETFs, the two biggest ones are GLD and SLV, GLD for gold and SLV for silver. Those do not allow exchange for the physical, and they don't give you access to the physical. You have to be what's known as an authorized participant, and you have to have at least 50,000 shares. If you're not an authorized participant and have at least 50,000 shares, you cannot get the physical. And the reason is the authorized participants are sort of like the bullion banks. They're the liquidity suppliers of the gold and silver to those funds. And so they have the ability to put in and take out as per the amount of shares that are bought and sold. But as a shareholder, you have no access. So when you're in GLD or SLV, you're getting access to price movements, but you don't have that protection that the physical will give you. And there's some concern based upon the way there's an enormous amount of concern based the way that those prospectuses or those legal documents are written for those ETFs, that, for example, all the risk, if they choose a bad storage provider, that just gets passed on to the consumer. There's no guarantees there, or there's no guarantees that actually bought the gold or the silver, and there's no guarantees that there's periodic audits done of the physical metals. So GLD and SLV, to me, are probably the absolute worst ways if you want to make sure that you have very safe storage and that it's actually going to be there when we need it. Those just aren't the strongest ways to do it. There are other derivatives, like if you go buy gold and silver mining stocks. The one caveat there I would tell people is it's a leveraged investment. You're looking at stock of a company that produces it. So
and it's a learning process.
It very much is. And if gold goes up, those stocks could go up a multiple of the gold price if it's a well-run stock. But one has to be a well-run stock, not overly indebted, have to have managed things very well, either have to have an operating mine or have a big resource and a report that everybody trusts for you to make money there. Same with silver. So there's a lot to learn there. It's a big learning curve. You can make a lot of money on those. You can also lose a lot of money very quick. So just be careful if you get into the mining space.
Yeah, I think we all, early in my career, we were all cutting checks, hoping for that 10 bagger on a mining deal. But certainly everything needs to go right, and you need a good gold environment. Right. And I think that's some of the frustration we've seen in the venture market the last 3 or 4 years is like we got gold trading near all-time highs and all-time highs at certain periods. And these gold stocks don't move. Right. Or very few select ones do. Right. And I think that's just put a lot of capital on the sidelines from investors just because it's been a very confusing and a very difficult market to navigate.
The equity space is difficult because it's very cyclical. The commodity space does not get investment consistently like Apple does or like IBM does. The money comes in when gold's doing well. And even in the base metals, when we're talking zinc and lead and those types of things, when gold's doing well, money flows. And gold's been doing well, but people aren't buying the stocks as much just yet. And typically it's a 4 to 12-year cycle. And it is the opposite of the business cycle. So if general stocks and bonds are doing well, the commodities aren't getting as much investment. When those markets get long in the tooth and people are experiencing losses, they'll go into commodities. So it's not only that you have to learn about how the equities work, but it's the timing of when you're in them that really matters. And you can park a lot of capital in there and it just sit there for years and not do anything.
And then you start also getting like jurisdiction risk, management risk, share equity risk. The list goes on. I want to stay focused on physical here because you're my expert on this. So you said not the ETFs. But so what do you think the best way to own physical? You said a local dealer, someone you can trust?
Yeah. If you want to hold some in your home or local to you, local dealers, or else I would go with a storage provider that's going to hold it either in your state or in your country or even internationally if you trust them. There are also a new emerging way to hold this that's combining gold and silver in storage, which with the ability to actually transmit it. Those are called asset-backed digital currencies, not like Bitcoin, not like Ethereum or Monero or the traditional private cryptos. It's a token matched one-to-one with gold and silver. So the value comes from the gold and silver, not from the token itself. The token is just a transmission mechanism. So think about it as you have cash in the bank represented by gold and silver, and you don't necessarily want to go grab that cash and drive it across town to pay your friends. You would then wire them the money, or especially if they live, across the country, you would wire them the money. Well, the asset-backed digital currencies give you the cash in the bank, the gold and silver secured, and then you can transmit that via the token to someone else. And now they have access to that in their account, and they can turn that, back into regular cash in their regular bank account if they want to, simply by selling it.
And is that all regulatory approved? No, I'm just looking at like the digital coin aspect of it. Is like the SEC okay with all this process and this way to transfer gold and silver?
Well, asset-backed digital currencies aren't crypto, so a lot of the concern around cryptocurrencies like Bitcoin and Ethereum has been from the SEC and also from the CFTC, has been that those coins are replacements for the dollar, or that they're securities because they're being IPO'd and that they're being treated as securities. The SEC has come out and said in the XRP case for Ripple that XRP was not a security at any point in time unless it was sold to another institutional investor. Then it became a security. But for retail sales, it was not. And so if we apply that model to, say, even Bitcoin or Ethereum, technically they shouldn't be securities, although some, the SEC still seems to want to legislate against Bitcoin and those types. The difference with asset-backed digital currencies are you're backing it with gold, silver. The token itself has no value. The token is just like a wire transfer mechanism. It's backed one by one. It's audited. And in addition, the state of Texas, there were 2 bills introduced in this legislative session in 2023 to introduce a state-backed asset-backed digital currency because Texas has a bullion depository. So you have gold or silver in the depository, and Texas creates a state digital currency that people could use to transmit money back and forth. I'm actually working for Citizens for Sound Money, C4SM, to craft legislation. We've crafted the original bills, omnibus bills, to go to the state of Texas, state of Florida, New Hampshire, and 2 other states to introduce gold as legal tender again. It is per the Constitution of the United States, but just the states reaffirming that. And as an option, we're thinking about doing a state-supported digital currency there as well, similar to the bills that were introduced in Texas in this legislative session. And in addition to that, 2 other cases. Indonesia has adopted Kinesis.money. Kinesis is a gold and silver backed token, uses Stellar blockchain. Stellar blockchain is not like Bitcoin, and though it's not value in the coin itself, it's a transmission method. It's kind of like a digital wire system, a digital ledger system, but it's backed one-to-one by gold and silver, audited by the same companies that audit BRICS and all those other gold storage companies. Indonesia, which has 270 million people, their president just announced implementation of this as an alternative digital currency, asset-backed digital currency for their country. I think this is the 5th most populous country in the world. And in addition, the BRICS nations, China, Russia, India, Brazil, and South Africa, have announced working on an asset-backed digital currency as well, and that would be a gold-backed currency. Now, they're in the early stages of that, but there have been several instances across the world, here in the States and abroad, where people are working on that. So that's really in its infancy. But it's interesting to see people saying, okay, as we're de-dollarizing, we're looking for other currencies. Why don't we back it by gold? And wouldn't it be easier just to use the blockchain to account for all that? Yeah, and that seems to be sort of where we're going with maybe a replacement for the dollar.
That's going to get really interesting because, like, obviously one of the biggest barriers to people wanting to own physical or get, leverage to it is the holding cost, delivery cost, and liquidation. Right. If you're buying physical, what do you think is an acceptable premium?
It really depends upon a lot of things. And it depends upon the coin. So that's a really, it could be a long answer. Let me break it down very simply. If you're looking at a government minted coin, a lot of it has to do with supply and demand. There was actually a whistleblower that came out from the US Mint a couple of months ago on a friend's show on YouTube that talked about how the U.S. Mint made a decision unlawfully to limit the supply of American silver eagles. According to the law, and you can look it up on the Cornell website or the House of Representatives website, according to law, the U.S. Mint is required to mint as many U.S. eagles as is demanded by the public and not to charge a premium more than their cost. So it's a break-even program. What they did was they limited the amount of American silver eagles. They printed, I think it was it 30 million of them during 2021, 2022, but there was more demand than that. But they pushed people to numismatic products like proof eagle and things like that have a premium.
Oh, really?
And so, yeah, people, if you want American silver eagle, you had to pay a premium. Well, that's unlawful because the law is written as such, you're not supposed to do that. So there was a little bit of a scandal with U.S. Mint on that. So if you're wondering why American silver eagles now are priced at anywhere from $10 to $15 over the spot price of silver, that's why there's artificial limitation on that. So it depends. The government minted coins come with a higher premium because they're government minted, and especially in the United States, they were once considered money. So generally people will pay a little bit more. And the American silver eagle is the most recognized government minted coin in the world. And so it demands a premium just because people demand it so much across the world. You can get into alternatives like the Canadian maple leaf, which is gorgeous, the South African Krugerrand, which is nice, the Austrian Philharmonic, the UK Britannia, and get a little bit lower premiums. But those government minted coins in general rule are going to be a little bit higher premium than some of the private mints like Sunshine or Perth or all of these across the world, where you can get them a little bit cheaper premium, but you can still get a minted coin or bar, private minted, beautiful designs, just gorgeous ones. And then you can get generics that are put out by mining companies like First Majestic, or just other mints that aren't as well known, but they coin their own, and the premiums also come down. So depending on the type of product you want, depends upon the premium. And I would say, it fluctuates by supply and demand. There's no set, amount. I remember when you could get constitutional silver, or what's called junk silver in the US, it's any physical coin made before 1965, with the exception of nickels, quarters, dimes, half dollars, and dollars, had a certain amount of silver in them. And there was a time when you could get those for the spot price of silver. Now the demand has gone up, and so they're priced at about the same as, the bars, the private minted bars. So it depends on supply and demand, and you really have to watch the market, shop your local coin dealer, shop your online dealers, and see who has the best deal. But watch out for those scandals that occur at the mint sometimes, where they overcharge because they're not printing enough, like the American Silver Eagle. Don't pay too much for your bullion. Look for alternatives. If you can't get American Silver Eagles, go for Maple Leafs or go for Philharmonics. Everybody knows what they are. You're going to be able to sell them to any reputable dealer, whenever you need to. So don't necessarily pay those premiums if you can't afford them.
Well, you answered like three of my next questions. I was like, I'm brand new. I want to buy some physical. I don't got somebody nearby. I want to go online. Now I got to put my credit card down. I don't know if they're going to deliver this. How do you do like a foolproof transaction for that person that wants to make their first physical buy?
Well, the easiest way is always go in a local coin dealer, because you're going to exchange either your credit card or your cash and get it right then and there. And you know what spot price is because you're looking online, and you've looked online at all the dealers, and you kind of know, if you want to buy an American Silver Eagle or just a regular generic round or a bar, you kind of know what the market price is. So you walk in full of information, and if they don't give you something, if they don't give you a deal similar to that, you're like, maybe I don't want to buy it. And a lot of times you go to your local coin dealer because they love walk-in business and they want repeat business. They'll give you a better deal than what you can find in your online outlet. In terms of buying it online, just go with reputable dealers. We have an online store, of course. I've been talking about this 4 or 5 years, built up a little bit of trust with the market. So people are ordering from us. But with the online guys, either go with somebody like me that and you know where to find, or go with one of the big guys like AppMex or Jam Bullion or SD Bullion. These guys have been doing it for a very long time. Or you can sometimes order directly from some of these private mints as well, if you order in size. Or you could go with somebody like Keith Neumeyer's company, First Majestic, which sells rounds. They're a very reputable miner. Everybody knows who they are.
And they're beautiful. I got a bunch of them.
They're gorgeous. Just go for somebody that and if you know and trust them, then you should be able to trust that process. Now, you don't just have to use your credit card. Because bullion is such low premium overall as a product, credit card charges are passed on to the consumer. And so when you're buying, they'll add in the 2.9 or 3%, depending on, the processing. if you do bank wire or cash, a lot of times you can save those fees and save yourself some money. So if you're really on a budget, pay cash or offer to do a bank wire. And when you do the bank wire, sometimes it's $20. But if you're buying, $1,000 or $2,000, it's not really, it's a lot cheaper. And then once they confirm those funds, they'll ship the metal to you. Or like I said, if you walk in and pay cash, you can get it right then and there.
Mm-hmm. Yeah, and I think that's, again, another barrier to buying physical for the people that don't understand how to do it, right? Like even when I buy my physical through Sprott, I have to send an online wire transfer first. And obviously I trust Sprott, right? It's going to get delivered. But if you don't know Sprott, that's something that's going to stop you from buying your first physical, right? Just that fear of getting ripped off. So we got to talk about this BRICS situation.
Yes.
How real is it? Is it a reality? Is it going to make a difference? Like, I just wanted your quick macro view on that.
So BRICS, I think, formed out of China's Belt and Road Initiative, where China connected in a trading network 72% of the world's GDP. And that's been going on really since the late 2000s, really since the Great Financial Crisis. The reaction to the Great Financial Crisis was for China to say, forget all this mess. We're the biggest creditor of the United States, and we're going to get screwed in this. So they started going to all these other countries and building trade networks and building ports and things like that. And a few years ago, they decided to join with Brazil, Russia, India, and South Africa to form BRICS, 5-country agreement. And it's not only a trade agreement, but now they're talking about doing a currency. They're talking about current currencies. Now, when Russia got sanctioned by the US and its allies as a result of invading Ukraine, what the United States and its allies did is they pushed Russia away from SWIFT and the wire system. They actually sanctioned them so they couldn't use it. And so Russia, China, and Iran said, well, we all have these internal transfer mechanisms. Let's build sort of our own SWIFT. So you got a bunch of countries using Iran's CPAM. Some people are using China's system, and they're transferring money that way. And then it's like, well, if we're in this trade network and we're not using the SWIFT system, why don't we build our own currency system, united currency system? So they had the BRICS summit last week. They've talked about doing a common currency. They've actually talked about doing a common digital currency backed by gold. And that's in early stages. It's got a lot of hurdles that has to overcome because, just talking about currency systems example, if you think about the euro, you got a bunch of countries in the euro. Not all of them are seen as contributing as much to the euro. So it's caused some instability in that trading union and the currency itself. Some people complain that the rich countries are financing the poor countries and that, there's not equal value transfer there. That's the same thing that they have to overcome with the BRICS nations. They got to figure out how they're going to do a common currency. They got to figure out how that plays with their existing central bank digital currencies, the pure fiat ones. Are they going to back it with gold? There are a lot of questions there. There's some good news out there. I actually covered, on our live stream today on our channel, that entire thing. That was the subject of my live stream. And when I was talking about all of the potential roadblocks they have to actually doing this. So is it real? Is there initiative to do this? Yes. Will it be something that happens in the next 4 to 6 months? Probably not. In addition, the BRICS nations have invited 6 other countries in, including Iran, United Arab Emirates, and a bunch of others in the Middle East and Africa to grow to 11 countries. But they don't even have the admission process there finalized. They're still working out the forms and the requirements. So the BRICS is a relatively new thing, but it's growing. And I think when that trade network grows and they get all of the nations in there, they're going to finalize their trading agreement, and then they're going to work on the currency. But I see this as being, at least a couple of years out. It's going to take some time. But just the fact that they're doing it, though, I think is the important part, because it shows that the rest of the world's willing to get off of the petrodollar system. And that's the key. And if you're interested in precious metals, you don't have a whole lot of time before the dollar falls in value, because the World Gold Council did a survey this year, and they asked world central banks, where are you going with the dollar and gold? And over 50% of the world central banks said, we're going to de-dollarize. So right now, according to the IMF, at the end of June, 59% of world currency reserves were in the dollar to facilitate petrodollar and world trade. The World Central Bank said in 5 years, that's going to be down to as low as 40%. They're all de-dollarizing rapidly.
That's crazy.
And the World Gold Council said, well, what are you buying? And they said, gold. And they said, why? To back our currencies. So the rest of the world is going to back their currencies with what? With gold. Why? Because gold's been around for so long that people trust it. That's why.
Yeah, I think there's a long-term play on this for sure. And I think the day the world sees it as a reality, is going to be the day that the US dollar does not have a good day.
Yeah, exactly.
It's going to be a really, really, really ugly time. And that could be a very significant driver for gold. I think other things could be a big driver for gold too, but that's just another tool in the toolbox there for things to go higher. Just the sake of time here, do you buy junior gold stocks? Do you play in the market too, or are you all on the physical side?
I have in the past. I did quite a bit of that. I will probably ramp some up when I see them start to move, the Huey and the GDX. Those are signs that the retail market's getting back into it when the Huey and GDX start doing well. I'll get back into it, but right now I'm all physical just because physical is going up while the mining stocks aren't. The mining stocks, the community that buys mining stocks haven't bought into the rise in gold just yet.
No.
But I think when we hit a new all-time high in gold, we go above the 2060, 2070 range, and we stay there for a bit. I think people are going to start to rotate into equities. And I don't necessarily think from gold. I think they'll rotate into gold and silver equities from other equities, because I think at about the same time, you're going to have issues in the US stock market and the bond market. Right now, bonds, the 2-year went over 5% here in the US for the first time in I don't know how long. Anything shorter than the 2 years, well above 5. If you're an existing bondholder and the new rates go up, you're losing money because the face value of your bond has to fall. So that's not good if you're an existing bondholder. So there's a lot of pressure right now on the bond market, and we think that people are going to start leveraging out of bonds. And given the financing concerns with U.S. companies and financing new debt at higher interest rates because of the Fed raising rates, stocks are starting to come under pressure. And we've seen more corporate bankruptcies this year in 2023 than in history. The fastest pace of corporate bankruptcies in U.S. history occurred in 2023. So we're already seeing weakness in the corporate sector, which is going to affect stocks. And we're seeing issues with rates and bonds causing other people to begin to think, okay, maybe we need to get in other things. And gold purchases are starting to go up. And so you're starting to see people leverage out of those, what I call traditional financial investments, into other things. So I think that we'll see some money start to flow to the junior mining stocks. I follow Kai Hoffman and his indicator, Oren Inc., with that, and it's starting to do a little bit better, but it hasn't stayed there just yet. And if you go to Oren Inc. and follow that index, he prints it every month, and you look at the Huey and the GDX and the GDXJ, and they start to go up and start to stay up, then I think that's a sign that retail has finally started to rotate out of those more traditional investments.
Well, we certainly need the generalist capital too, as well, right? Yep. And that's it's the die-hard bugs right now that are still putting up bids on junior stocks or keeping their own companies alive, right?
Yeah, there aren't, there are only the biggest gold stocks are really listed on the major exchanges. And so a lot of these indexes and these small miners don't get that passive income from like 401ks. So they're working a little bit of a disadvantage. However, when people get into gold and silver big time and gold's hitting new all-time highs, that money flows very quickly into not only the physical, but into the stocks. And the stocks being leveraged will do very well. So it's a game of, first of all, learning the companies that you want to be invested in, and then being in before you get that big push. And that's the way, junior mining stocks always are.
Yeah. And the time will certainly come. We don't know when, but they all go in cycles. And it certainly feels that we're closer to a bottom right now than a top. So I think
I
we're in for some
big
times.
If you're invested in the junior mining space, I think you're going to be doing okay here in the next 5 years for sure.
Yeah. Awesome. Robert, thanks so much for joining me today. That was an awesome conversation. Everyone, please be sure to check out the weekly educational videos he does. We'll put your link at the bottom of our description there. Be sure to check out his, sign up for what he does and go to goldsilverpros.com and you can buy your bullion. Robert, great conversation. Thank you so much. Until next week, folks.
Yep. Thanks for having me on. I appreciate it.